Dangerous travel conditions tonight due to heavy and blowing snow. Most of southern Ontario is under a winter storm warning this evening. Some parts of the GTA could get up to 30 centimeters. Yeah, that right there, lightning and thunder. They've been reported around the GTA tonight as the storm blows through.
What are you doing? Woo! That was a lot of snow.
That's the dividend snowball.
The dividend snowball.
Yeah.
Oh. This is why we need our dividends.
Should we make a snowball and snow angel? We are tired. We just shoveled like crazy snow. I am sore. By the time
2 hours of snow shoveling.
Yeah.
And that's for 4 people, our neighbors. We have a shared drive, so 4 of us are out there shoveling snow for 2 solid hours.
No, I know. We might have some footage. I'm gonna try to see. It was my first snow angel. Yes, that's my first one, and that's why we call the dividend snowball.
Yeah, perfect example.
I know. We didn't have any desire to make any snowman outside, not even a snowball, but we're gonna share with you our dividend income and how much you were able to receive in
February
2023. Yes, exactly. What is going to happen is we go through with you and all the dividends that we have received for this month. After that, we are going to share with you, as always, the breakdown, the different asset allocation. We talk about the dividend snowball and how we call. And stick until the end of the video because I have a good surprise for you. Something that we have been working for quite some time. We have tested quite a lot, but I think it's time to share with you and you can take advantage of that.
So the very first company that we received a dividend from in February was Emera. Emera falls into the utility sector of our portfolio. We received $483. If you remember back to what stocks we were going to buy in 2023, Emera is one of those stocks that we want to add to in our portfolio. So currently we have 700 shares, and by the end of the year, we're looking to add another 200 and end the year right around 900 shares.
Yeah, another interesting factor about Emera is that over the last 16 years, it has been paying dividends. You know, the dividends have been actually being grown, which is quite nice. And as we record this video at the beginning of March, the dividend yield is around 5.26%. Year to date, the stock is kind of around minus 30%, which is not a lot. There was always ups and downs. And 0.3. What did I say?
30%.
No, oh my God, no. This is Algonquin, not Emera. So 0.3%. Thank you.
So it's only down 0.3%. And the lowest it's been for the year, 52-week low really, was $47, right around $48. And its 52-week high was around $63. As we film this, it's sitting right in and around $52.50. So if we're able to start purchasing some of that now, I think we're really going to see the capital growth in this particular stock once that turns around.
Yeah, the second company that paid us dividends is Royal Bank. It's the first time that Royal Bank is paying us this year, and we received $429.
Next one is also a bank. It's Bank of Montreal, and we received $660.
Yeah, another financial institution is Power Corp, which we received $820.69.
Will be a change coming with Power Corp in the next quarter's payments. We'll cover that then.
If you have not subscribed yet, it is a great opportunity so you can see it right away why.
Don't give it away.
The changes to
Why
Power
we changed
Corp.
it.
There you go. Yes.
So the next one is actually the very first time that we're starting to receive distributions. We spoke about this particular company in that same video about what stocks we were going to be buying this year. And that one is A&W. It's a, what do they call it? A income trust.
Income trust, yeah.
Yes. So we received a whopping $6.50 from A&W. But this is another one that we're going to try to consistently grow over the course of the year.
And that's really important. One of the things that I wanted to highlight, which is when you see like those big numbers, 400, the 600, 800, training, it doesn't matter. See, we are starting now with A&W. We just received $6.50, which we are totally fine. If you are starting now your journey to financial independence, don't be discouraged at all. All that you have to do is find ways to save and to invest money. That's what we are doing with A&W now.
Yeah, exactly. The next one, so now we're kind of getting into A&W, that's one that pays monthly. So each month we're going to be receiving that $6.50.
Assuming that, I'm sorry.
No, it's okay.
Assuming that we don't make any changes.
Yes, which
right?
we totally plan on adding more to that over the course of the year.
Spoiler alert, subscribe, you're not gonna miss that.
Yeah. So the next one is another one of those newer positions for us, and it also pays monthly, and that is Hamilton's HDIV. And we received $677.84. Year to date with that particular one, because it pays monthly, we have received $1,297.48.
Yeah. Last one is HYLG. It's also another Hamilton ETF. We received $387.39, and year to date, $494.03.
So when you add everything up for February of 2023, we received $3,405.02.
Pause for a second. If you have been watching our videos, go back to the previous one or even look at the highlights and see how much we have received. I don't know if you notice or not, but it's quite the same amount. There's different, it's 50 cents, and I love numbers, and I keep looking at them, and I said, how much did we receive last year? And I have to go through back the numbers again. I'm gonna tell you right away. We received in January 2023 $3,405.52. It's only 50 cents less.
I think we can live with that. And that's something we're really trying to achieve, is a consistent amount of monthly income, because this is really what we're going to be living off of, hopefully in a year's time. So the more consistent and the more equitable we can keep that monthly income, the better for my financial accounting needs.
Yeah, 100%. But that's important. This is our financial situation. And that's why we have now invested more heavily on those income fund ones, because those are the ones that are going to be responsible for some of our monthly expenses as we stop working and in 2024. Yes, there we go.
So I think Jean's going to put up on screen now this another little graphic that's going to break down the asset allocation of where we have all of the income coming from. So in the telecom sector, it represents right now about 15% of our income. In total, we have received $1,047.41. In the utility sector, it represents about 14% of our income, and we have received $959.07. And the financial sector, 41% of our income, it's the largest. We have received year to date $2,810.29. Consumer cyclical, this is where the A&W income trust fits in. We've received $6.50. Our ETFs, those are the ones, not the income ETFs. Those are our XAWs, our ITOTs. From those, we have received $195.66. And then at the bottom, those income generating ETFs that we hold, we have received $1,791.51.
Yeah. In total, we received how much?
6,810. It's really small,
it's
guys.
It's really small. I'm gonna make it better next time, and I'm gonna increase the font. I am sorry.
So in total for the year to date, 2 months, we received $6,810.44.
Thank you. If we break it down, for the Canadian exposure, we have around 4,800, which is 71% of our portfolio. The global, which is everything ex-Canada, a whopping 3%, which is $195.66. And the income-oriented one, which is basically the two Hamilton ETFs, HGIV and HYLG, we received around 1,791, which is 26% of our portfolio.
So back in our financial goals for 2023, we have that goal of reaching $40,000 of distribution and dividend income for the year. And right now, with that $6,800 for the first 2 months, we are 17% of our way to that goal.
Yes, which is quite amazing. So basically, depending on how much we are going to be receiving in March, since every company pays quarterly, we kind of have an idea of how much we will be receiving at the end of 2023 if we don't do anything else and we just keep those positions, and fingers crossed, none of those positions are going to cut their dividends.
No more dividend
right?
cuts.
I'm looking at you, Algonquin, and that's really nice. We have received a few comments really quick about Algonquin. What are we planning to do? We are going to keep it right away. We are not going to do anything. We are just not buying anything. We are not selling anything specifically for Algonquin, and see what's going to happen in the next few months.
Yeah, it has a little bit of it's bounced a little tiny bit. We're back up over $10 a share. So hopefully that keeps going. And
we are down quite a lot, more than 30 or 40%, I can tell you that.
Yeah, but we haven't lost anything because we didn't sell it.
No, not at all. That's a good point. Let's talk about our dividend income strategy, which is the dividend snowball. I love those graphics. And here comes another one on your screen. What you're going to see is in 2020, we had $0. So we have, at this point in 2020, we have not received anything back to February. So this is, February of each year, from 2020 until 2023. However, in 2021, in February, we received just around $1,600, and we had a lot of positions. We were all over the place. And at that time, though, this is really important. We had a few companies that we still have up to this date, which are Emira, Royal Bank, and BMO. We had more, but I just want to show you those three since they are paying us in February 2023.
And we will continue to hold those ones. They are going nowhere.
Nowhere. Yes, we are not. In 2022, comparing with 2021, we were down around 8.20%, and we received $1,556.52. At that time, we had 5 positions. That was exactly when we started investing in Power Corp. And as you can see, Power Corp, it was one of the biggest positions that we received on this month in 2023, right? So here comes 2023. So from 1,556 to $3,405, which is a whopping 180. Oh my God, that's even a big number. It is a whopping what? How should I say?
118%.
118%. Comparing 2023 with 2022. The new company, the new position to 2023, as we just mentioned, it says A&W.
So we always talk about ways to make more money and earn more money and save more money. Well, Jean and I recently, as this whole transition into preparing for our traveling lifestyle and our years abroad, we're really trying to start cutting back on a lot of our costs as much as possible. And we've transitioned some of our banking to Simply Financial. It's a zero-fee bank account.
I say checking, right?
Checking account, right? And that's where we're sending and having a lot of our money held now. We both had separate bank accounts. With RBC, we were paying $12 a month. With CIBC, it was, depending on how many transactions we had, it could have been 14, it could have been 6. It was never the same. And when you add all of that up over the course of the year, it's a lot of money. So by switching to a no fee, you don't have all the bells and whistles, but we didn't use any of the bells and whistles of a standard bank. By switching to this no fee account, we actually made money in a way, because Jean, simply by having his payroll deposited into his account, earned $350 over the course of the year. Why wouldn't you do that?
We get that we have, inflation is all over the place and it's a high inflation, but in situations like this, that's what we have to find ways, $350, maybe 2 weeks, going out for dinner, or 2 weeks or 2 months or whatever. So those are the ways that we always say, how are you guys be able to make money and save? And it's looking for opportunities like this. It's just making one simple change, which is changing your payroll from like the existing bank account to Simply Financial. You don't have to do this. You don't have to do this, for the remaining of the year. We do, I think it's for only 3 months, and after that, you receive this $350 on your account. We are happy with Simply Finance. We wanted to give the opportunity, not even us. I mean, we are using our referral link. So if you are interested in doing the same, you'll be able to do this, and you also get like a kickback.
And really, honestly, so you actually earn more than $350 when you think of it, because say we take RBC, right? Jan switched over from RBC. That's $12 a month over the course of the year.
True.
My math is really bad, so we're gonna say it's like 120, 100, call it 130 bucks. $130 on top of the $350. That's not nothing.
Yeah, and you can see that. I'm gonna show you on the screen like the initial deposit that I had back in February, and then slowly you can see the money piling up on my account. I think it's after 5 months that you're gonna have the $350 on your account, but slowly I can see the increments now. I think that I have received up to this point $60. So if you wanna take advantage of that, and if you can use this money on your TFSA, that's what you need to do. Change your payroll to Simply Finance. The same way that you do this, wait a few months and withdraw that money from Simply Finance, put it over your TFSA, and here you go. You can start your journey to financial independence now and start buying dividends.
Yeah, and I think this particular deal, the $350 deal, is only till the end of March.
Yeah.
But I think they come out with some new incentive all the time. So
yes. If you want to do, if you are in Canada, if you want to support our channel, so here's what you need to do. Use our link, and you're going to have access to the same promotion as we did.
That's right. So going back to the dividends, that was just a side note. Sometimes it's just effort it takes, right? There's a little bit of effort required in order to save a little bit of money. But flash forward 10 years, that $120 a year is significant.
Yeah, especially for parents, you out there, if you have your kids or if you are just finishing university, if you are a student and looking for ways, there you go. You have an opportunity now.
Yeah, exactly. So when we look back at our dividend snowball, our dividend strategy, you're going to notice that in the year of 2020, that's when we started our dividend investing journey, and we really had only invested for about half of the year. We only received dividends for the second 2 quarters of the year. We received $4,634. In 2021, that snowballed into $16,876. Which again increased in 2022 to $25,847. And as we stand right now, we're at $6,800 for the year of 2023. But that snowball is picking up speed. It's really getting bigger and bigger. And we're really now starting to see the benefits of that snowball with the dividend increases and consistent investing, and it's really impressive.
It takes a lot of time, but you can see the results. And everything that we are sharing with you guys, if you go back to our playlist, you're gonna see everything that we have said. And you're gonna say, oh, these guys are not telling the truth. And you have to be mindful, you have to be careful with what is out there on YouTube, right? So it's not only us, that's not financial advice at all. You do what is in your best interest, but you can see that it's possible to do. We are learning as we go,
And go back to some of the previous videos too, because a lot of you guys have given us excellent ideas on other options to invest in. And some of those might fit your lifestyle or your financial investing journey better than what we invest in. So
100%.
Lots of ideas in the comments down below.
Exactly. So thank you. We're very grateful for that.
Yeah. Oh, and a lot of people ask, okay, so you've earned $3,400 this month. How much do we have to invest in order to obtain $3,400 a month in dividends? It's a significant amount of money. When we look at the cost basis of our investments for this, it's right around $340,000. So that's a rough number. It's not exact, but and this has been generated over the past couple of years. So we've bought at lower points, we've bought at higher points. This is This is our average cost base for these particular investments.
Yes. And the best thing is what? You don't know, you don't remember. I'm gonna remind you right now.
I don't know.
The best thing is I created finally the last month in Jan 2023. I've said I'm working. I mean, we are working on a spreadsheet.
I see a spreadsheet and I see red.
She is my QA, so she does the test and so many other folks that help me. Thank you very much. So if you want to start tracking your dividends as well, we have finally able to create a dividend investing strategy. Oh, it's a big name. So basically you can track your dividends right now. All that you have to do is click on the link that you can see on your screen now. We are also going to pin that to the comments. All that you have to do is download that spreadsheet. It's free. You don't have to do anything. And all the instructions on how to use the spreadsheet or not, you're going to also find that as well.
But if you have any questions, please feel free, reach out, email us. We'll do our best to help you out. In case there's a glitch. Because it is something that Jean and I Jean's created. So it works really good.
Yeah, it does work really good. You have to make a few adjustments because we can't automate everything 100%. What I was trying to do is basically for Canada, US, and you know that we have so many folks out there and other parts of the planet as well. Take a look and see if it makes sense.
But that being said, if you guys download it and you're using it and you see something that could make it better, or if there's something that you notice that might be better if we changed it, please let us know, because we're completely open to suggestions and only want to make it better for everybody to use. It's a good tool, right? So we want everyone to have access to it.
Yes, and that's the way that we're trying to find ways to say thanks to you and all the comments and all the likes and all the support that we have receiving all over, internet, via email. So you guys are amazing. So thank you.
And I want to say specifically thank you very much for everything and all the support from last week's video when we talked about our stress and our anxiety about what's coming next year for us. All of the really amazing, thoughtful comments that everybody kind of took the time to write really meant the world to us. So really appreciate it. Thank you.
Yeah. Funny thing is not all about the money. More and more, it's more like the other side, the finance side. That's how it gets people, views and everything. But there's another side of it, which is like the day-to-day life that we wanted to bring to you. As we know, we are transparent about our financial situation. You see the numbers. If you say, oh, it's not true, you have how much you have received in 2022 or 2023, go back to the playlist. You can see that as well. All that we are trying to say is it's possible. You can do it if we are doing. Trust me, you definitely can. It does require a mindset change. It does require working hard and discipline. But if this is what we are trying to do, you can make it happen.
So I think we've rambled enough. So have a great week. This was our video for our dividends for February 2023. Hopefully you enjoyed them. And we'll see you next week.
And don't forget to like and subscribe and send your comments, because that's how we try to find ways to help the community as well.
All right, guys. Have a great week.
Thank you.
Bye.
Bye. Good.
Good job, S'mores.
Thank you. I hope it's still recording. I keep saying that, right?
Every week. Though.
What am I supposed to say?
I don't know. I'm really tired. So tired.
And that's, we get, my nose is itchy. It's gonna be part of the bloopers, but
Oh, it's me now? Oh.
I think so.
Okay. Today is the perfect example of why we need dividends to live off of in 2024. Yesterday, we received a foot of snow. We don't want to do it anymore. So we have been, Today, we're going to talk about our dividend income for February of 2024. No, wait.